My name is Steve Weil. I am the president of RMS Accounting and in charge of the tax department. And while PPP may not seem like tax, it's got some pieces in there. And we have been working diligently to make sure that we had all the information that our clients and the rest of the people that rely on us need to understand exactly what's going on with PPP loans they have. So knowing that the last thing you want to do is look at me through this presentation, I'm going to put the slides up on the screen and allow everybody to, this is understanding the amendments to the PPP Loan Forgiveness Act that recently passed. This is really new stuff. The president signed this last Friday evening after I went home. It finally got a public law number yesterday, and it still has not been published as public law. We've had to use the bill that the Senate and the House passed to get a lot of our information as well as a lot of other research materials. But we're going to try and bring it all together for you and tell you really what it means if you already have a PPP loan or if you're thinking about getting a PPP loan. At the end of this presentation, we will give you a link, and the link will be to all of the reference materials for this presentation. Eventually, this presentation will also be the recorded version on that link, along with our prior longer presentation on the PPP loans, EIDL, and other programs available to help business out. So the Payroll Protection Program Flexibility Act is what this is called. It was signed, as I told you, last Friday by President Trump. It's not quite gotten it's just gotten its public law number, but it's not been published in the Federal Registry yet. This is a bill that business owners and many groups have been after the Congress and the Senate to make changes, and this contains a lot of those changes we've been asking for. Groups like the AICPA, the NAEA, the NFIB have all been saying, great, you gave us the money. We love that. You're going to help businesses out, but you expect us to use it too fast. There's some things in here that are going to make it hard for many business owners to come back and use the money, and the bill addresses many, although not all of those. The Payroll Flexibility Act is H.R. 7010, and it was passed by the House and the Senate, and it's signed by the President, so it's good. It's only 4 pages. Sounds simple, right? Nothing's ever simple when it comes to legislation, because the 4 pages in many places don't tell you what it is. It tells you what words to strike out, what paragraphs to strike out, and what new words to insert or paragraphs to insert in the legislation that created PPP loans. So you got to do some finagling back and forth to figure out what do they really mean. There's some new provisions, a little bit complicated, but in the end, we're going to try in 30 minutes to give you a simple overview of what this is. Then if you need more help, you can certainly see your professional. You can always give us a call. If you've been on one of these seminars, we always offer a free 1-hour consultation, so we're happy to do that for you. The changes. Change number 1 is it extends the time period to use the money that you got in your PPP loan. The original term, you had to use the money within 8 weeks of the day the loan proceeds were dispersed to you. And if you were in the restaurant business and weren't allowed to open yet, or you were in some other business that the government did not, either local or state government, did not let you open and kept you restricted, or you had to get your business up and running and you couldn't get all your employees back in and use up the money in the 8 weeks, that was a problem. You can now, instead of spending the money on payroll in 8 weeks, you can choose to use a 24-week period. So that's really great. We'll talk more about it. And it's a choice. It's not 8 weeks plus 24. It's 8 weeks or 24, depending on the choices. So we're going to talk a little bit more about that. There were changes required to how much of this money you have to use on payroll. Prior to this amendment, 75% of the dollars you received in your PPP loan had to be used for payroll. 25% could be used for other expenses. I got 24 in here, so obviously I mistyped it, but it was, you had to use 25% for other expenses, and Now you can use up to 40 expense for other qualifying expenses. That doesn't mean everything. Those are the qualifying expenses, and we'll go into that. The deadline for when you have to have your full workforce in place to qualify, having brought everybody else back, has changed. It's gone from June 30th to December 31, so more time to get your employees back, more time to do the rehiring. It has also eased the rehiring requirements, and we'll talk about that a little bit and put that in. It requires the application for forgiveness to be submitted within 10 months of the end of your eligible period. So if you're using the 8-week period, you have 10 months after the end of the 8 weeks from getting your money. If you're using the 24 weeks, so it really kind of tells us when we have to get these applications in to be eligible. They don't say that's an application deadline. They say that if you haven't gotten the application in, they're going to start figuring out to charge you the interest and the principal on the loan and talk about repayment. It extends for new loans, and it may at some point for older loans, the repayment period for any amount that's not forgiven. So it extends from the 2 years that the original PPP legislation allowed to a 5-year period for any amounts that you received and that weren't forgiven, but there's a caveat to that, and we'll talk about that. It also allows recipients who received PPP loans prior to enactment of this amendment to opt out of these changes and use the earlier rules. So if under the earlier rules you've already qualified for the 100% forgiveness, or that's going to be best for you, you can opt out and use the earlier rules. It's not a you lost if you didn't get filed yet. Now you're going to have to use the new rules no matter what. It also strikes out the disallowance of a payroll tax deferral, not part of the loan, but in the original legislation, there is a payroll tax deferral that allows you to defer the employer taxes, the Social Security portion that you pay, you match your employees, and that you pay into the government. You could hold on to that money and defer it, and it disqualified in the original legislation. You couldn't take advantage of that if you were getting PPP money. You now can take advantage of the payroll deferral and hold off on paying those Social Security employer taxes until a later date. It might not be a good decision, but for some needing money, it is an option that is available. So that being said, we're going to go over these one by one a little bit more. The first one is it extends the time period to use the funds from 8 weeks to 24 weeks. So you start counting the day you got the money, and now if you haven't used up the 75% within 8 weeks, you can choose to use up 60% within 24 weeks on payroll and payroll-related expenses. This will make it easier for borrowers to get forgiveness on loans where they weren't able to bring their employees back. It makes it more difficult to keep in place the workforce, because the problem is that you have to keep your workforce in place longer to qualify. You have to keep them. If you choose to use the 24 weeks, you have to have that full employment number through the end of the year. And that can be a little more difficult. Under the original, you had to have it through June 30th. For those with outstanding loans that already had loans prior to the date of enactment, you can choose the 8-week period. So I'm looking at my clients and saying, right now, we're going to figure out, can they get full forgiveness at 8 weeks? If they can and the rules meet for then, we're going to do that on the current rules. If not, then we'll look at the 24 and decide which is going to be best for them and make the election when we file. I think that if you qualify at the 8 weeks, you want to get the application in, you want to go for forgiveness, because all the rules aren't written on this new amendment yet, and it seems like we're not really sure who's in charge and where, and when the SBA and the Treasury are competing for putting together rules, they don't always exactly match the legislation, and we'll talk about that a little more. Some questions remain unanswered. The first one is, has the compensation limit for those with $100,000 or more been increased, because if you're looking at 24 weeks, you would be increasing the compensation based on $100,000 to $46,154. It certainly would seem like that based on the legislation, which is going to be great for sole proprietors, and even for other businesses. It'll allow owners to qualify for more, but we don't know that because it doesn't specifically say how that's going to be calculated. We don't really know. If you're a sole proprietor, great news for you, because this should change that and make, you only got basically 2.5 times whatever your Schedule C was, limited to not more than $100,000. And when you look at this, you're basically automatically going to get forgiveness on the whole amount, assuming we're correct about how that's going to work. Changes require the amounts used for payroll. They don't have to be 75% anymore. You can only use 60% for payroll and use the other 25 to instead of 25%, 40% for other expenses such as rent, mortgage interest on pre-existing mortgages, utilities. For these other business expenses, there are some restaurateurs that's going to be really important because they've had to cut down their payroll. They're not back to full strength yet. They're only at 50% of capacity, but their rents can be unusually high and having more in it. The problem with this was, as we originally read the legislation, instead of phasing out, if you don't do 75%, and the old rules said 75% payroll, or you phase down how much is going to be forgiven for the amount you're under 75%. The new law seems to read that 60% is a cliff, and if you don't use 60% for payroll, you're going to not get anything for forgiveness. Now, that's what the law reads. The Treasury Secretary and the SBA have now come out and clarified and said, no, it's really not a cliff. We're going to make regulations that say, gee, the 60% phases out like the 75%. Sounds great to me. Not a legal scholar. I'm not really sure where the Treasury and the SBA secretaries get to change the way the law was written, and there were questions in Congress and in the Senate because they thought it was a mistake to write the law this way. We don't really know what was intended, but it seems that these guys feel that they can, and I don't know any small business people that are going to scream and yell about the Treasury making things a little bit easier than that. Payroll does include wages, vacation pay, employer-paid health insurance, employer-paid retirement contributions. So all those numbers come into your 75 or 60% when you're figuring your forgiveness. Number 3, this pushes back the deadline from June 30th to December 31. So you really have to have your employees all on the book still at December 31 if you use the amended rules. If you still use the prior rules, it looks like you can still use the June 30th. And I don't know about you, but for a lot of the businesses I'm advising, we don't know what that business is going to look like on December 30th. And once they've used up the money, they've got their 24 weeks out of the way, whether or not they'll be able to afford to maintain the employee numbers they have to do. So that's something, is another reason to get done with the 8 weeks if you can. The law did not change how salaries are calculated for forgiveness. Payroll calculations used in the loan application still apply to the forgivable amounts. So there's something that stayed the same. It does ease the rehire requirements. So you don't have to rehire somebody and meet the same full-time equivalents. You can count somebody as if you rehired them if you didn't. If you're unable to rehire somebody because the employee refuses and you can't find somebody else to replace them that has similar skills, you can't fill that spot, the employee won't come back, that is not going to count against you. If you're able to demonstrate that you offered somebody to bring them back, somebody that was on furlough or layoff or unemployment, and you offered to bring them back and they refused to come back before 12/31/2020, you're going to be able to exclude them and it won't count against you as not bringing back that full-time equivalent. You do need to document this stuff. So if you offer somebody that was furloughed to come back, be sure you do it in writing. I don't know you're going to get them to sign something saying I refuse to come back, but you could at least do a negative confirmation. If we don't hear from you by X date, or if you don't show up for work on X date, we're going to assume that you have decided that you're no longer going to come back, or you're not willing to come back. That might be a way to document. You do it by email, you could do it in writing. If you're able to demonstrate the inability to return to the same level, so this might also be really helpful for restaurants, gyms, other businesses that really can't get back to the full level of activity to bring everybody back. If you're a barbershop and you had to separate out your patrons more, and so you can only have 2 appointments an hour instead of 10 appointments an hour, or whatever your numbers were, if you can demonstrate the inability to do the same levels because of something that went on or because the revenue being down, so that may also work to reduce these equivalent full-time employees that you need to show. Requires the application be done within 10 months of the last day you're applying for the money on. You need to be looking at and getting in these applications. At the very least, after the 10 months, the SBA has instructed the lenders to begin the process for collecting amounts not forgiven. Any amount forgiven wouldn't come into that. So while they don't put a deadline down, I think that they have here. It extends the repayment term from 2 years to 5 years for amounts not forgiven. Now, again, the SBA and the Treasury Secretary have come out and said, wait a minute, it really doesn't do that. If you got a PPP loan before June 5th or on June 5th, those loan documents are going to say anything that's not repaid has to be repaid in 2 years at 1%. If you get loan documents that are being generated now, don't know they've made the corrections yet, but are being generated after the president signed the bill, those loan documents should say anything that is not forgiven, you have 5 years to pay back at the 1% rate. We believe, but we don't know this for a fact yet, that the prior loans will be extended, but you'll have to do new paperwork. That if you have one of those original loans that have a 2-year term, when the SBA and your banks get caught up on everything, they're going to have to offer you an updated loan agreement that amends your current agreement from a 2-year term to a 5-year term. But we don't know that yet. We don't know how it's going to work because there hasn't been a lot, make that any guidance on this matter. So we just want you to know and think about it. Remember, you could roll these into EIDL loans, but those are as high as 3.75%. These PPP loans, anything you don't repay, is going to be at 1%, and going to a 5-year term should really be helpful with that. As I say, there is a joint statement on that, and I've given you that. These slides will be available. Bill allows recipients to receive PPP loans prior to enactment to opt out. So again, you can say, I'm going to use the 8-week, not the 24-week. I'm going to use the June date, not the December week. But you can't mix and match. You either have to opt out and take the before rules, or you have to opt in and take the 24-week, the December 31 rules. So if you're eligible, I am going to say again, if you can get your full forgiveness in the 8-week period, knowing what that is, having the application out, that's the way to go. If you can't, then we should look at the 24-week period, and at the end of the 24-week period, we will still do a comparison and say, would we be better off using the 8-week rules or the 24-week rules? There are lots of calculations in these things. It is not my intention today to go through the calculations, but I have spreadsheets on top of spreadsheets because there are multiple calculations for different periods and what's better and what works best. The simplified method, the non-simplified method, and all I can tell you is the only way to figure out which one is going to be best for you is to run the calculations every which way from Sunday. So this also strikes the disallowance of the payroll tax deferral. So in addition to having a PPP, I'm paying my people. When I pay my people, I have to put on a 941 6.2%, which is Social Security. Half of that Social Security, not Medicare, but Social Security, old age part, comes out of the employee check, half the 6.2%. That's withholding for Social Security. The other half as an employer comes out of my pocket. I still owe that money, but even though I owe that money, I can squirrel it away, use it for operating my business and not pay it over as payroll taxes. I will not receive a penalty for failure to pay my payroll taxes on time. And whatever it is I withhold for that, I will have to pay half of it back at the end of 2021 and the other half of it back at the end of 2022. The warning here is you are not paying this money and you're going to have to pay the taxes. They're not forgiving or letting you hold them in 2021 or 2022. So it may mean not only do you have to pay the current taxes, but you have to come up with that money you deferred. That is a dangerous position to be in if you don't have a way to come up with the money. I will get to the questions at the end. I just want to get through this and then we will follow up. But you might want to think about that. It amounts to half the 6.2%. On very small payrolls, not a lot of money here. On larger payrolls, this could be substantial, and if it helps you to pay the rent or to meet employee payments after the 8 or 24 weeks, it is a way of putting money back in your pocket as an employer, and it was not available to anybody that took out a PPP loan prior. In fact, I have a couple of people I dealt with, and when we did the analysis, we found if they could only get 8 weeks on the PPP loan, the old rules, they were actually better off taking this deferral. It would put more cash in their pocket right now, and there were some other payroll programs that they couldn't get. Now we can say to them, you know, go back and apply for PPP loans. There is still money in the PPP loan bucket. It may not be available at your bank, but it is available and it's still out there. So there are alternate places to go. We covered that in a prior seminar, and the link I'm going to give you has that seminar along with some information on where you can go to look for these things, but if you don't have one. Document, document, document. Document employees that refuse to return to work when you recall them. Have something that shows you made the offer in writing and they didn't come back one way or another. Document the inability to find a replacement employee. You know, I have a client that is in the business of doing high-end furniture repairs, and those are skilled people, and he doesn't just need any human. He needs somebody that has these artistic skills and knows how to do furniture refinishing and repairs, because they do that. And if he can't find somebody to replace the employee that refuses to come to work, he needs to document that inability so that he doesn't get dinged on his less full-time equivalents. Document the hours for full and part-time people, how many hours they're working. Reductions in your business revenue. Again, you know, great, we've got books and records for a tax return, but if you're going to show that your business was still down 40%, you're in the restaurant business, it was down 50%, you couldn't bring everybody back because you were only allowed to have 50% occupancy, you better have something that shows your revenue was down over the same period last year so that we can show that your revenue's down. Documentation never hurts. We do not believe that they're going to, if you're under $2 million, they're probably not going to audit you. They can. If your loan was over $2 million, they said they're going to audit all of them. We just want to make sure that everybody is covered. I have included here the joint statement that talks about the 60% not being a cliff and coming away. It comes out of a joint statement by the SBA and the U.S. Treasury Secretary Mnuchin. I don't know where they got authority to overwrite law, but I'm all for it. Good for them, whether it's what Congress intended or not. And that is also going to be out there for you to see. There's a little more information here that we increased the 5 years. That's in there, but they'll tell you in this that it's for the new loans, not the existing loans. As I say, I don't think they've addressed that yet. I believe that if you were early to the game and you don't get full forgiveness, you'll be able to convert this, but I can't back that up with anything in law yet or anything in a reg. The law seems to say that. The Secretary of the Treasury and the SBA are saying something else, but they're not saying it won't apply to you. So, websites you should know about that this information is going to, and then we'll get to your questions. The SBA site, under COVID-19, they have all this stuff, including the forgiveness apps. The Internal Revenue has been putting out information as well to the tax deferrals and other things. Our website, RMS Accounting, has a link for COVID-19. We have a lot of stuff on there you may find helpful. And if, most important of all, if you go to today's presentation and handouts, which is at rmsaccounting.com, PPP-loan-webinar-handouts. This presentation is there. So is a lot of the backup material, and we are more than happy to provide it. So is our prior presentation as a video, and you can go there and find that. If you have questions that we don't answer, I'm going to get to the questions here in just a moment, but if you have other questions, you can always send me an email to steve@RMS Accounting or call us for a free consultation. We are happy to sit down with you and go through this. The good news is that you're going to get some money. You're probably not going to have to pay it back. The rules are probably a little easier. The bad news is anytime you deal with the government, their idea of simple is that they write the sentence on the bottom, this is the simplified version. Doesn't mean that it is. And there are a lot of things you have to do and get right here. We've been doing them for a lot of our clients. We've seen people fail and not get what they should because people that weren't qualified put this together, somebody that was a secretary or somebody trying in their office. And certainly it does not hurt to get a second opinion, and we would be happy to help you. So I've got a few things here. Let's see. Donna wants to know, and I love when we put our names in. Donna wants to know, if we use the 8-week period, do we get the benefits of the other changes? We do not. I don't think that we get the benefit of waiting till December 31, which isn't really a benefit. Do we get the benefit of being able to not pay in the payroll tax? It appears yes, because that is a change to the deferral law. They literally went in and said, delete the paragraph that says this is unavailable for anybody getting a PPP loan. So it's like it was never there, crossed out and removed. So you could certainly, even if you use the 8-week period, get that. Do you get the 5 years instead of the 2 years? Well, the way the law is written right now, to me, it seems like you're supposed to get the 5 years, but remember, we sign documents, and I believe that if they stay with the law and they do what they're supposed to, you are going to get that. But if you choose the 8-week, you got to use the 8 weeks. You got to use the 75%. You can't be 60% payroll, but only 8 weeks. You have to use the rules for forgiveness as they're put in. There are other things in this bill that affected things like the deferral of payroll tax, but they're really not part of PPP. They were in the deferral legislation that deferred the payroll taxes, and that's been changed. The period for the loans, I believe you're going to be able to get the 5 years, but you can't take it to the bank because we don't have written regulations to that. And we do know that if you got a loan, we have one. And if I look at my loan document, I signed agreeing anything that wasn't forgiven, that the term would be the 2 years. That term on my loan document doesn't change until my bank has me sign an amended loan document. And we think the provisions need to be made for that. And understand, even today when I went and looked, there is a public law number for this, which is great, but it's still not up on the site for public law. You still have to go back. So this is kind of a work in progress, getting the documents out, everybody doing what they're supposed to, answering questions. We get quotes from the SBA and the Secretary of the Treasury, that they did on a television interview, not on a memo that they sent out. We're still waiting for them to write the memo in some cases. All right, hopefully we answered Donna's question. Let's see here. Sandra, in order to meet the 8-week period, can I pay an employee for part of July before June 30th? The answer is you can only pay them for the 8 weeks. You have to count 8 weeks from the day you got the money, and it's the accrued. So you can use payroll actually paid or accrued. If you go back to the PPP rules, you can also simplify that by using pay periods. I have a biweekly pay period. I got my money, was deposited in my bank on Monday, but my next pay period, 2-week pay period, doesn't start until Friday. I'm going to go 8 weeks. My payrolls are every 2 weeks. I could go from Friday and count that as my 8 weeks forward 4 pay periods. So it's a little more, I can't just pay somebody ahead for time they haven't worked yet, but I can pay out vacation pay and bonuses to my employees. And in fact, we were calculating our PPP forgiveness, wanted to make the 8 weeks, and our employees have all been working through this whole rigmarole. And one of the things we determined was there was a little bit that would not be forgiven because it didn't make the payroll period. And to make the 8 weeks, we could give everybody a few $100s extra on their next payroll as incentive pay. That would count, and that would get us over that threshold. So I hope that helps. Who's next on the hit parade? Sandy, did you send out a worksheet from prior seminar to calculate the numbers? No, I have not. I'm not sending out our worksheet. The way that it works is we're happy to calculate them, but the truth is we're having to change stuff on the worksheet that calculate. We haven't made this fancy because rules change as we go. We're happy to calculate it for you, but I really don't want to get into the liability of I'm the worksheet producer and there is a formula that somebody gets caught in the middle of that changed or didn't change, or they didn't put in the numbers right. If you need help, I'm going to suggest you just don't buy somebody's worksheet and assume that the calculations are all right. As I say, we've come up with our own. We've compared it to some others we've purchased from professional societies and such. We're manually checking calculations on the first couple loans we run through them, but we're not providing a worksheet. We are happy to provide the consulting. So do you do 1099? Do 1099s people qualify for the total payroll amount? So the way that this was originally intended, we've talked about 1099s before. 1099s are independent contractors. If you pay somebody in a 1099, they are not your employee. They don't work for you. They're in business for themselves. They had to apply for the loan for themselves because you might pay them $5,000 a month, but they have business or operating expenses and they're only entitled to whatever the net is for the 8 weeks. So there is a way for people that are self-employed to go ahead and do this, people in partnerships as well, to figure out how much they're entitled to of PPP money, and then assuming that they're entitled to it now and they got it based on the 2.5, they should get it all forgiven automatically. If I'm an independent contractor and I have employees, I can also deal with those employees. But we originally thought when Congress talked about we were going to be able to pay the 1099s, and they're just not employees. You have, by giving them a 1099, you said they're in business for themselves. They've said they're in business for themselves. The caveat here comes, just to cover it, somebody getting a 1099 who, yeah, it's great. I get to deduct all my expenses on Schedule C. I've been coming up with everything under the sun. So for 2019, when I filed my Schedule C, even though I got $50,000 on a 1099, I only pay tax on $12,000. I've used auto mileage and office in the home and everything else that I could come up with under the sun to reduce my profit, my taxes. Well, that $12,000 is going to be your annual compensation amount because you've gotten it down to that for your PPP loan. So that means 12,000 divided by 12 months, it's $1,000 a month. I am eligible for a $2,500 PPP loan. I am an Uber driver and I got a 1099 and I'm self-employed, but I really don't make any money. It's zero because what my auto expense is, and it's, I get some cash, but I end up in wear and tear in my auto and everything. Well, if I'm not making any money, I'm not going to get a PPP as self-employed. So self-employed people more than anybody else really should consult with an expert on this stuff and talk about what do they qualify. If I haven't filed my 2019 tax return and I've got a Schedule C, I might want to think about what expenses I'm taking and what shows up on that return, because if I'm zeroing out my income every year, I'm not going to get any PPP loan, and there are other things that might not work. I might be zeroing out my income and not getting any Social Security credits and other things, and it looks good I'm not paying any taxes, but it's not going to be helpful for me. So do we have any other questions? Okay. I like seminars that, we give you everything you wanted, right? I do appreciate you all coming out. We were trying to keep this down to around 30 minutes. I want to thank you all for attending. Please drop me an email if you have any questions. Give me a call. We are happy to answer questions. We want to help you. Our goal right now is to help keep our business and our friends' businesses and others in business. And we do that by putting this information together, by providing free consultations, by getting out and purchasing things in the local community. Not a big fan of ordering over Amazon. We want to go to local restaurants. We want to buy in local merchants. We want to do everything we can to help the small businesses in our community, because after all, those are the people that at some point need our services and help us keep our employees employed. We hope that you will do the same. Please remember the service people out there who are getting 50% less business because they've been limited in how many tables they can have, and are working twice as hard between cleaning up and doing things. And your small business owners, sometimes paying a few cents more, a few dollars more for something is really worth it when it goes into your community, not to the big box or to somebody that works out over the internet. So I thank you all very much. I will leave this slide up for anybody who wants to have a look for a few minutes. And if I can do anything else for you, please type a question or let me know. Have a great day.